Good evening. It is time for today's Tax Talk. I'm your host. I'm attorney Stephen Leahy. It is Thursday, December 8th, the year of our Lord 2022, and lots of news about FTX. They really hosed a lot of investors, and now those investors are going to get hosed by the IRS. Maybe. That's what we're going to talk about today. Won't you join us? Well, again, I don't like to talk about this FTX. So I don't want to talk about the guy. And I don't want to talk about the guy with his three initials like he's somebody famous. Because he's a swindler, in my book. That's my opinion. He'll probably turn around and sue somebody like me. It's just an opinion. I think I can look at it objectively and think, hey, maybe there was a Ponzi scheme going on here, right? But nobody has charged him with the crime, and that's part of the problem. For investors to take the loss. So now you're going to take a loss, but you can't deduct it from your taxes because it's not officially a loss yet. So you might have to wait till after the bankruptcy case is completed, or if there's criminal charges, if it's up to Maxine Waters, blowing them kisses in the well of the Congress. I don't know if that'll ever happen. But anyway, that's the story we're going to talk about today. So let's go right to the story. Here's the story. If I go up, then it's going to start this video. So FTX customers will face a nightmare when they file their income tax returns next year. The firm's legal and accounting problems may prevent customers from filing on time, and it could be months or even years before they can deduct their losses. There's a good chance that many FTX users, who numbered 1.2 million at the end of 2021, will be forced to file extensions. Much depends on whether authorities charge Sam, I'm not going to say his name, with a crime and how quickly investigators untangle FTX's financial mess. A criminal proceeding should bring into play special IRS rules for Ponzi scheme investment losses. Yeah, there's special rules for that because of Madoff, allowing for immediate deductions. Otherwise, FTX customers, remember who their customers were, Madoff's customers were, right? They're important people. They're going to pass laws to protect them right off the bat. They're going to do that quickly. Do they do that for you and me? Probably not. But again, this is who's in charge. And that's part of the problem with this Sam, is that he's got important friends and paid them a lot of money, kind of like the Ukraine did. Right, paid a lot of money to a lot of important people and gets a lot of good benefits because of it. A criminal proceeding should play special IRS rules for Ponzi scheme investment losses, allowing for immediate deductions. Otherwise, FTX customers with frozen or missing assets will have to wait for IRS guidance or court judgments or claim deductions based on gray areas of the tax law. Customers of FTX are in tax purgatory right now, said this guy from the law school. If you look back at the scandal with Bernie Madoff, he was charged in December 2008, and the IRS didn't come out with guidance on him until March of 2009. I have to say that's not a long time for the IRS to come out with the rules. I think it's very short, to be honest with you. As a result of the Madoff case, the IRS issued, now I'm going to get this. I don't know what happened there. As a result of the Madoff case, the IRS issued Revenue Ruling 200909. I did look these rules over. They're very complicated. Here, I told you that was going to happen. So let's turn it.
The end of the question that's on the top of everyone's mind right now.
It's a legal opinion. I did list a link down below if you're interested in seeing these rulings or revenue procedures. Okay, they're linked below, which instructs taxpayers on how to report the amount of and timing of losses from Ponzi investment schemes. Additionally, this other revenue procedure provides a safe harbor method to compute and claim that loss. Madoff scammed nearly 40,000 investors. FTX's creditors number more than 1 million. I would file an extension and wait for more visibility because I think there is going to be more guidance issued because everybody is all over the board on this. Part of the reason for the guidance with the Madoff situation, is the IRS didn't want to deal with a glut of amended returns. Extensions. Extensions give taxpayers 6 additional months to October 16th, 2023 to file a tax return. However, the IRS will charge interest on any unpaid tax. A taxpayer may be required to make an extension payment to avoid interest and penalties. A complicated task when the amount of deductible loss could still be unknown at this time. Protective claims. Taxpayers can also file protective refund claims. These claims preserve the right to claim a refund when the refund depends on future events that may not be determinable until after the statute of limitations expires. I'd probably go the extension route just to wait for more visibility because I can't see the IRS offering no input whatsoever. I can see it. This guy, Sam, his legal status is key to how FTX losses will be treated. The IRS no longer allows a deduction for personal casualty and theft losses except in cases of qualified disasters, though you can still write off losses from the theft of investment property. To qualify as an investment theft loss, a so-called lead figure in FTX would have to, 1, be indicted on fraud, embezzlement, or similar statutes under the state or federal law, and either 2, admit guilt or have their assets frozen by court order, or 3, there are no charges due to the lead figure's death. Oh, don't tempt people. Revenue Procedure 20920 allows taxpayers to claim a 95% safe harbor deduction on their qualified investment loss. Taxpayers can claim a 75% deduction if they are pursuing action against parties other than the fraudsters. This is advantageous. Capital loss deductions against ordinary income are normally capped at $3,000 per year. Any losses from completed crypto sales or withdrawals would fall in this category. But what about frozen funds? Worthless securities. The IRS allows taxpayers to claim a loss from worthless securities. If you can't claim a Ponzi investment loss, can you write off a crypto as a worthless security? Although the IRS treats cryptocurrency much like stocks and other capital assets, the Securities and Exchange Commission has not classified cryptocurrency as a security, meaning the IRS might not allow you to write off any frozen or unsold crypto as worthless. It's a gray area. She also notes FTX crypto customers may eventually recover something, so claiming your accounts as worthless might not be correct. That means a taxpayer may be forced to wait until the bankruptcy court authorizes payments to account holders, a process that could take months or years, more likely years than months. Hanman notes that an abandonment loss is another possible option. To claim an abandonment loss, a taxpayer must permanently surrender and relinquish all rights in a security and receive nothing in exchange for it. We just don't have clarity right now, she says. A lot of hassle and many headaches can be avoided if we have guidance on this early. To the extent there is no guidance on this issue and people are all over the board, I don't know the IRS is going to turn a blind eye to it. Hanman hopes the IRS will issue guidance on FTX by March 2023. Well, that probably makes more sense than, because that's about the timing of the last one, right? That was March of the next year. So maybe that'll happen. I think that's the earliest date that you're going to get something, and maybe I'm not giving any legal advice here. So, and I don't think she was giving legal advice there, but maybe people should consider an extension, like as she mentioned in this story. I don't know. That's something you'll have to figure out with your tax professional, as I am. Okay. So anyway, that's where we are today. I want to thank you so much for joining us. There were some other good stories today. I'm not going to talk about them, but there was lots of more stories about the 1099-K and how it's how people have to really look out for that. And I don't want to keep harping on the 1099K and the Cash App. Yesterday we did the story about the Cash App. You can find it. It's one of the past videos here. If you're on YouTube, it's on YouTube. Probably show up here at the end. My 2 previous videos. But again, suffice it to say that we hope that they change the rule. They might change it by the end of the year. They don't have a lot of time, though, do they? They can also pass a law and make it retroactive. They've done that before when it comes to, for instance, mortgage, whether mortgages are can be deducted or not, or a loss with a 1099-C. And so they did that retroactively. So they can do it retroactively even after the first of the year. But it does really cause problems when you're trying to figure out your own tax return. If the later they do it, the harder it gets to get done. So thanks so much for joining us here today. We'll be back next Monday. I want to encourage you to like and subscribe. Please like and subscribe. We need your help to get this information out, and so any help from you is much appreciated. And as I say every night, if you have IRS problems, if you owe the IRS money, if you have unfiled returns and you need help and you don't know what to do, the first thing you should do is get a copy of my book, Deal with Your IRS Problem Today. Go to freeirsbook.com. That's freeirsbook.com. Get your free copy, and I will pay for the book. I'm going to ask you to pay for the shipping and handling. Go to freeirsbook.com to get your free copy. So thanks so much for joining us here today, and we'll see you right back here on Monday for another episode of today's Tax Talk. God bless you. We are out.